What is going on, everybody? Welcome back to Chart Request Live. My name is Patrick Dunawilla. Joining me today, we got Sam Gatlin. Sam is on the charts today. Sam, how you doing?
I'm doing good. It's the start of Q1 earnings season. XRP is ripping, crypto is ripping. They're kicking the shit out of these bond yields. It's a great day to be alive.
Yeah, I feel like XRP, it's been a rough go for those holders over the years, but they're finally being rewarded. And this has really been the crypto leader. I looked at this weekend in our top 10 report, and Ripple's up like 300 and something percent. This was as of Sunday. It's obviously up a lot more, but post-election, or I'm sorry, in the past year, past 12 months, while Bitcoin's up like 120%. So this one's really been the leader this cycle. So,
And I think it
betting on
really
that
comes down to the
today.
short-term strength as well. Like right after the election, this one ripped 500% in a matter of days, and
Yeah, and and
it
and like
consolidated straight sideways. And sure enough, you see today the headlines of Donald Trump wanting to make a strategic reserve of U.S. based cryptos, and XRP is front and center for that reserve. So there's a story behind this.
yeah, and after a 500% run up post-election too, right? You couldn't ask for a better, healthier way to consolidate that type of gain than like a nice triangle pattern like that and just resolving so cleanly out of that that I don't think you want to second guess it. And then, you could even draw like a nice little base. Those patterns kind of shifted over time. Some people would have called that a bull flag. Well, the point is, it's a healthy continuation pattern of a really, really strong trend. So,
It's in the context of a 8-year basing pattern too.
yeah. Now
About to resolve it today.
you were a little appalled when I told you I set some sell orders, but if you fib out this consolidation here, there's a fib that comes in around 3.5, right around 3.5. So I think it makes sense to take a little bit of profits there and letting the rest on to run.
For sure, and we talk about it all the time. These big bases, um, while they do lend themselves to higher prices over longer time frames, getting started can be a challenge. So I would expect XRP to struggle here for a little bit, and not just blast right through this level.
Yeah, totally. So just looking through the mailbag here. Sorry to divert my attention, but you ready to get going? You got any other
Yeah,
thoughts
let's get
on
to
automotive?
it. I
We
saw
had
some good
a
ones in the
really nice
mailbag. So
recovery this week. Why don't you touch on that real quick? You mentioned earnings season really got going with the banks on Wednesday there, and a really nice move from financials. And of course, yields below 4.7. I mean, that's such a gift to risk assets, I think. That's a fail
absolutely, yeah.
breakout, right?
Risk assets have made it pretty clear that they don't like when bond yields go up, and they do very much like it when they go down. So this has been a great few days here for bond yields. The Citigroup was one of the best reactions yesterday out of the financials. You got a really nice breakaway gap from this multi-week consolidation. I think this one could be in for some short-term selling, though. You're running into a pretty major shelf of former highs, but uh, I learned this one was the shitty bank, not Citibank. So to see it ripping is kind of different.
Yeah, it's
Speaks to
definitely.
just general risk appetite too, like some of these terrible, awful European financials, like Deutsche Bank. Like that is just like it's a meme, honestly, just like how bad it is.
Yeah, I mean, well, financials, at least the US financials were really strong last year. They were one of the leaders. So we're kind of seeing that continue. There was a little hiccup to start the year, but man, they really that was quite the start to earnings season, huh?
Right. Yeah.
So
Yeah.
so let's
Do you
get
believe in
going
the
here. We
quote
got
that you don't have bull markets without financials?
right, right. I mean, you saw the whole Holy Trinity kind of turn it around this week. I mean, week's not over yet, but when I say the Holy Trinity, I mean semis, banks, and home builders. What I saw with the home builders yesterday or these last 3 days, really, really constructive. Um,
Definitely.
yeah, yeah, look at that. Just gap and go, gap and go. Um, Let's start off with FFIV. This one comes from Dan in the mailbag. Uh, Base breakout and holding it so far.
So we're looking at a software company with about $15.5 billion of market cap here, with the F5 Incorporated. I believe Dan was referring to this base that goes back to the late 2021 or early 2022 peak. So that's around, I think you could just want to call it 250. Nice round number. But we are above there. We have consolidated there for several weeks. And the bears failed to get this one back below that peak. So you want to bet on this one going up in price. And
Yeah, in fact, if you zoomed in after this, on like a 4 hour, you'd see a little base on base, right? Like on top of this big base, you have this little mini base over the last few weeks.
for sure. And you love to see that. Sometimes you see cup and handle patterns, and this, frankly, is far more bullish than a cup and handle pattern because the bears failed to keep the price below that prior cycle peak.
I like that. It's like a more bullish iteration of the cup and handle pattern, right? We gotta
That's
come
what I
up with a
think
name
about
for
it.
that, right?
Yeah.
The base on base. I think that's what
The
it
base
is.
on base. Yeah, I
That's what
like
it is.
that. But no, I love this one. Long above 250 with an initial target of 3.25. That's about 30% upside. So it's not a big move, but that's enough to make you some money. And let's look at it
It's in the
benchmark.
eyes of the beholder. If you're playing that with options, could be a nice little home run.
Exactly. Yeah, that's a good point. So this one I've benchmarked to the IGV, the software index, which is FFIV's peer group, and you can see a pretty clear downtrend. Would you draw it like this? Like
Yeah, I mean
this was a
it's more
failed
important
move,
that,
and now
that
you're getting
the
the real move here?
yeah, it's more important that like you're seeing the structure, right? It's like it's working on that kind of bearish to bullish reversal, that kind of and right there, yeah, right there at support too makes perfect sense to see that downtrend end right at those 2008 lows there, those financial crisis lows. Um, yeah,
Definitely. This is a good find, Dan. Thanks for bringing this to us.
yeah, absolutely. The next one's from Danny. Not sure any relation, but talking about Zscaler, another software name. Oppenheimer put a 250 price target year end, looks like. Um, is there a level to confirm a breakout or potential breakout? 250 price target. What do you think of that, Sam?
I
What
think
do
they have some technicians there at Oppenheimer. They're
we
looking
might know
at
a
this
few.
pivot high from early 2024. That is the target. And I imagine that's also a key retracement level from this prior drawdown. And sure enough, it is. You know that isn't that's where Ari Wald is, right?
Yeah,
Oppenheimer.
yeah.
So one of our favorite technicians in the world, Ari Oppenheimer, or Ari Wald, works at Oppenheimer. So big shout out to them. They know how to look at a chart, and I think this is exactly what they're talking about. This
Yeah,
pivot high.
I think
That's the
that's maybe
target.
even where the party gets started, right? I mean, it makes sense to target that level, but if it gets up to that 250 level, that'll complete that nice little cup or the nice handle to stay on theme there. It's not a clean cup and handle pattern, but it create a nice little base there. Yeah, absolutely.
For sure. Yeah. No, this one's not bearish at all. And it looks a lot like net, I believe. Yeah, so this is a
Yeah.
very, very similar chart, cup and handle pattern, but Cloudflare, ticker net, has already resolved that basing pattern. So I think that is the playbook for Zscaler, really, is you want to bet on it getting back to this level. Maybe you trim some there, but I think ultimately it's going towards that 375 level from 2021.
Well, listen, Sam, I hope you're not sick of looking at package software names because I got another one for you.
Hey, bring it on.
Intuit, Intu.
Now this one is, yeah, yeah.
Also from Danny. Do you think it will break the 2021 all-time high? Is this question.
You want to bet on it eventually breaking it, yeah. But I think let's talk about this one on a relative basis.
I mean, it had a nasty failed breakout. It was looking so nice, kind of over the summer, or well, looks like the breakout failed in November. But this one was setting up for all year last year, and then kind of a disappointing breakout there. Very
Right,
disappointing.
exactly. It just never resolved. You saw that potentially bullish formation, but I just think this one's in for more consolidation. Like you saw this massive outperformance from the financial crisis lows to the peak in 2021. And you've seen it really struggle here. It's turning sideways. This isn't something we typically get excited about buying, you know.
Yeah, and
So
you know,
so
you look at some
understand
of the
what you have
others
here. I think
on a
is
relative basis. I think this one, it's not really the relative chart's not giving you a reason to own it.
exactly. That's my point. So yeah, I do think that this one could reclaim that 2021 peak, but at the same time, is this something you want to go out of your way to buy? I would argue no.
Right, right. Those other two charts that we looked at in the space, probably better alternatives, right?
Exactly. Yeah. So I think you can buy
But,
this
but
one.
when those bases do resolve, man, it'll be a good trade one day. But just
Yeah, one day, but I think you need to give it time to shape up. I think
Yeah.
that this, let's call it 700 level, that's really what you're looking for.
yep,
Market couldn't have made that level more clear to you. It was the high in late 2021. You came up in late 2024 and failed there. Pretty textbook shooting star there on the weekly candlestick. So that's your level. Buy it above 700, and I think you could use an initial target of the 161.8 extension of this prior drawdown. That would come in around 950,
yeah,
above 900, let's call it.
yeah, yeah,
That's not a bad trade, but I think this one needs more time.
yeah, for sure. A little more time in the oven. So Sam, that's all for the mailbag. Let's hit the chat, shall we?
Sure, let's do it.
So first we got WGS. That is
Who brought this one along?
this one comes from Stephen Fisher.
Okay.
This is
Cool. Yeah, no, I've been stalking
cool,
this
man.
one. It's been one of my favorite setups in the market, but it has really been a disappointment. So what you have here is a pretty severe drawdown, about like 99.9% drawdown from this early 2021 peak that came right after the IPO. Then it bottomed around the turn of 2023 to 2024, and you've just got a straight V bottom higher from there.
Yeah.
Rallied
We can
over
talk about bearish to bullish
7,000%.
reversal, right? What
Yeah,
is it up? What is it off those lows?
like 7,000%. This was
Oh
the
my
biggest
gosh,
winner
got
in
it.
the market
Wow, I
last
mean, it
year.
went from $1 to now it's trading at 77. My gosh.
Exactly. Yeah. So this is a huge, huge winner. And if we zoom into the,
Depending on your anchor point, right?
yeah, yeah, that's a great point. Yeah. So with the context of this one, rallying over 7,000%, we have formed a multi-month, really, consolidation pattern. This is how I've had it marked up here, and you can see that we got a nasty sell-off here, and the bulls held this trend line for a few days, but today it is falling below. So I think you don't want to touch this from the long side. I think you could potentially take a swing at it from the short side if it falls below 66. But really, it's just a range-bound market right now. Nothing to do until it decisively breaks above or below this range. So
Yeah, and it's got that earnings gap. That's kind of what's creating that range. Looks like
exactly, yeah,
big,
it's like
strong
a
earnings report.
50% earnings gap.
Yeah, and then just nothing since that earnings report. You know.
Right.
Looked
And
like the party was
it's
getting
rallied
started, and then
50%.
just
It can rally 50% on earnings like really easily because it not only did it here in what was that, late October, but it also did it here back in April. You got a 55% earnings candle followed by 23% the next day. So
yeah, and even more recently, just in the past, what, 7 days or so, you had a breakout of that range that failed, right? So that's why you kind of want to be looking to signs of caution here. And even with the market's rally over the last few days, this thing has seen nothing but selling. So here we are at the lows of the week. Not the best, short-term look, but um, as you said, in the context of a longer-term recovery there, that is a V bottom. Something like Meta that also had a V-shaped recovery from its fair market low. Yeah, that started the same way, just a really, really sharp V that just continued on, and this one's hitting new targets.
but you did
So
see Meta turn sideways here from like the summer of 2023
totally,
until
yeah.
around Christmas time.
Yeah, and I think that coincided with one of those major fib retracements. Um, I don't know if this one's there yet, this WGS, but
So
definitely one to keep an eye on. I mean, from a longer term context.
yeah, for sure. And let's see if we get any fibs. Let's do it based on log scale. And sure
We can
enough,
try both. Yeah.
that is the 61.8 retracement of the prior drawdown. So this is a key level of interest. You can see that it was trouble back here in August, really, let's call it the summer of 2022. You ended up resolving lower with a 50% down candle in a single week. So there are some dead bodies here, and that's what you're seeing right now is the market's churning through those dead bodies. So you want to give it time, but I think this one has more upside in the future. Just not today.
Yeah, you don't want to see it stray too far below that or really get into that gap. I think that's where trouble
So let me
starts.
ask you, Patrick, how would
Yeah.
you call this one a failed? So failed breakout right here, and then it confirms on a close below this candlestick.
Yeah, it depends
How do
on
you
your
do that?
time frame. I think you could put it to the like those pre-earning lows. So like you see that little consolidation, that little flag before earnings there. Yeah, you could put your out point there, and at that point it would have filled the earnings gap. I mean, there's really no hope below there, but that's giving it a pretty big leash. I think it makes more sense if you're a little shorter term, just if you're in this one, 64, 65, it starts falling below there. There's really no,
Yeah, you don't want it to enter that gap.
yeah, then it starts filling the gap, and then you're dealing with like the low 60s.
Cool.
Eh,
Yeah. No, this is a great stock. Thanks for bringing this to us. Who
Yeah,
brought this?
Zerby.
Zerby.
Shout out to Mr. Zerby.
Mr. Zerby, always coming through.
Uh, he wants to. Oh, he's got a small cap industrial. That thing's making a comeback. CXT. This one. Ooh, nice one.
So what we're looking at here is about a $3.5 billion industrial
Sam,
machinery stock.
I gotta tell you, man, I love when I see these small cap industrials that I haven't heard of because and it's even better when they're at or near all-time highs or 52-week highs. I mean, I haven't heard of Crane NXT. Have you?
No, I have not. This is a new one. I definitely agree with you that these are some of the most under the radar stocks. No Wall Street analyst is going to cover $1 billion industrial stock from the Midwest, but that doesn't mean it cannot outperform the market. So I think we should talk about what this is first. It's long-term. Look at this uptrend. During the bull market after COVID, this one rallied. Looks like about 200% relative to the S&P 500. So
And I'm sure that more recent consolidation over the last years, 2 years, probably coincided with one of those fib extensions from that, what, 2018 to 2020 low? Yep, right there.
Yeah,
Yeah.
so this is what you're talking about here. This peak in January 2018 down to the low in March 2020. I think we could draw it just a little bit differently, get it to line up with the price. So it seems like the market's really respecting this 3450 level as the peak.
Yeah.
So yeah, this 60, let's call it 64, is the new resistance for this one, and you're 2 pennies below that right now. So this is a very actionable setup. You're coming off of a prolonged consolidation, so this one has been sideways since August of 2023. So that is quite some time. You know, you'd want to bet on this one being ready to go again, right? Like,
Yeah, absolutely. I mean,
probably doesn't need more time to consolidate.
right. I mean, where's the next fib on that thing?
So let's see. Let's
Yeah, even if you use a non-log.
Yeah. So I fibbed it out wrong. Messed up my settings. So that doesn't make it as clean. That's interesting. So 64 is still the level, but how do you see this, Patrick?
Well, try fibbing out that shorter term consolidation, like where was that?
Just this base right here.
Yeah,
So if you were to do that,
because that's in the shorter term, that's a big enough. Yeah, that's a 2 year base. That's kind of a reset, right?
right. Let's call it 6350, 64. That is the level to be in. From there, I think 72 and 3/4 is the target. That's about 15% upside. That could happen pretty fast, give it 1 to 3 months.
Yeah,
I think ultimately it ends up closer to this 87 level, though. 87, maybe 88.
it would make
That's how
sense. I
I
mean,
see
how
it.
big that base is, right? Really long, wide consolidation and
Right,
tight too, relatively
right, yeah.
to compared to that run up, right?
This is an extreme
Um,
volatility compression.
so another great one from Mr. Zerby there.
Yeah, for sure. And you had a very similar consolidation here in 2021, 2022, eventually resolved higher in early 2023. And you can see that it just ripped for about 6 months. Not much consolidation there. So I wouldn't be surprised if it looked like that.
You ready for Wavy's pick?
Yeah, wavy.
Let's okay, it's a nat gas stock NFG.
Yeah.
What a move
So
for nat gas.
this one is screaming higher. Looks like it's a $6 billion company. They do all of they produce it, distribute it, market it, everything that you can possibly do with natural gas. So that is what you're dealing with here. I think if you're long right now, Mr. Wavy, I think you should be looking at this shelf of former highs from 2022. I think that's going to be a problem, and that coincides with the upper bounds of an even bigger base. That goes back to 2011. So let me just
That's
draw a line.
74-ish, 75 levels come into play like
Call it
2011,
75.
2014, 2022.
Wavy likes his big bases though, so I don't
But
think he's playing for a trade just back up to this shelf of former highs, but potentially this
continuation
one
of
could
that
get the job
primary
done.
uptrend.
Yeah. So I think you want to bet on this one eventually resolving higher. And let's see. I actually want to use a line chart.
Makes sense.
Yeah.
Going the Jason
So
Purrs route. I like it.
yeah, Jason knows how to do it.
Yeah, it's clean, you know? Takes out a lot of that noise.
Definitely. It comes with experience, you know, just these candlesticks are very helpful a lot of the time, but a
Yeah, and
lot
it's
of
this is also, longer term setup too, so it makes sense to look at it in like a weekly line chart. That'll give you a lot cleaner levels.
for sure. So yeah, not much to do at this point. You know, this one's probably gonna need to consolidate up here for, I don't know, it could be a few weeks, a few months, quarters, years, who knows? But I think it'll need to consolidate up here before moving higher to new all-time highs. But I think there is a trade here from 75, let's call it, to 100. That's how I see it. That's a big old base too, you know.
Yeah.
Not a lot look like this in the energy sector.
I mean, it's been dealing with that level since what, 2018 or so, or
2011,
20, yeah, I'm sorry, my skill was all messed up.
2011,
2011,
2014,
yeah. I was graduating high
2022.
school then, so ooh, quite a little bit of time's passed.
Right. Thanks for
So
bringing this to us, Wavy. Big shout
as
out.
always, as always. Up next we got HChan STNG, one of the shipping stocks.
For sure. I've noticed these shipping stocks have been ripping so far this year. You know, along with that commodities theme, they've been dead money for some time now. And are they gonna resume their primary uptrends here in 2025? I think it's possible. So here you had a pretty nice momentum divergence began in November, middle of November, and it lasted until the bottom in the middle of December. You got a nice hammer candlestick with some follow through, and here you are making new. Let's see, looks like 50-day highs. So not incredibly significant, but it's a short-term breakout. And I love to see this breakaway gap here from this even shorter-term base. You know, this one's definitely trying to reverse. And I think this is where I would get involved if I don't already have a position in this one. I think from there you can target this shelf of former highs around 80, 83, let's call it. So that's not a bad trade. 63 to 83. It could happen really fast. Would you mark this one up any differently, Patrick?
I lost your volume there for a second. Where did you say you would get involved? A break of that VWAP?
Yeah, like so 63 to 83.
Yeah, that's right.
That's
in
what
that
I think is
earnings
the trade.
gap too. That from November, right where the VWAP is. Yeah,
So you,
maybe confirmation comes when it closes that gap.
yeah.
And I mean, at that point, it would have cleared the VWAP too. Maybe you don't even need to see it clear that.
It's really just this shelf right here that you're talking
Yeah,
about.
yeah, makes
So, yeah, you could move your entry up from 63 to 66 and have a little bit more conviction in the entry, but still a target of that 83 level.
yeah. So you're saying, and I kind of lost you for a second, but 64 to back to that 100 level is the better trade here? Nothing to do in the short term, or?
No, no, I think this is more of a short-term trade. You know?
Oh, okay. So you're saying getting here.
Yeah, get in here around 66, sell it at about 83.
Oh,
That's the
okay.
trade.
But not here as of today though.
No, 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 no,
Yeah.
no, no. Nothing to do
So
here today.
we got another one from HChan, PEN. The just one N, not two N. This is
So,
Penumbra Medical Specialties.
about a $10 billion medical specialty stock. Nice looking base here. Shout out H-Chan. You know we're all about the base.
And he mentioned a 3-month time frame too.
Yeah. All right. So if your time frame is 3 months, I think you want this one above the pivot highs from, I drew that line wrong, from February 2024. That is the key level of interest for your time frame there.
Right around
And
275-ish.
yeah, yeah, that is. So nothing to do here today, but a close above there, I think, would lead you higher back towards this high from the summer of 2023. So that would be about 25% upside. That's not a bad trade for a 1 to 3 month time frame.
No.
Definitely worth considering. And medical devices. Let's just.
Like IHI?
Yeah. So yeah, this is the sector or the industry group, I should call it.
It's
It's
a good house in a bad neighborhood, right?
Right, right. So this is one. This is far stronger than something like biotech. Really struggling as a industry group. It's back at the same level it was in 2022. You can go all the way back. This is the same level it was at in 2020. There's been no progress there for a very long time for biotech. So inside of that small cap healthcare theme, medical devices really is the place to be. So I like fishing in that pond.
Yeah. Well, listen, we got one more from Mr. Zerby. He asked if we have time. We always got time for him. Celsius.
Hey.
CELH. My markings on this one are all messed up because it's split.
So we've talked about this one quite a few times on here. Just its role as a leader in the consumer staples sector. And so from this low in 2011 to the peak in 2024, it rallied like 200,000%. Monster winner. Fortunes were made with this stock. And it has come back to its IPO peak. So it IPO'd in 2007 and then quickly peaked and rolled over. It fell about 99, about as close as you can get to 100%.
Lucky it didn't get wiped out, delisted.
Yeah, no, this thing looked like a zero for a while until it reversed in 2011. So this is an incredibly significant level. This, let's call it 25. Nice round number. And it has held that level for some time now. And let's zoom into the daily candles. And you can see that momentum formed a bullish divergence in the summer of 2024. And price has continued to fall, but momentum is looking pretty good here. I don't think this one has much downside remaining.
I think it makes sense to have that VWAP there, or even at that second peak there.
Yes. So this is what you're talking about.
But that's probably going to be where things get cooking again for the bulls.
Right. So you really want to let this shape up. You can see the beginnings of some type of basing formation.
Right. It's like something going down a half pipe, right? Or like dropping a ball down a half pipe. Like it kind of, the momentum slowly stalls, and then it's got to base again, build the right side of that.
Yeah, I love that analogy.
But it takes time to get that upward momentum going,
Right, it's a really messy process.
Slow. Right, and that's what you're seeing, right? The divergence, and once it does get up towards that VWAP, if and when it does get towards that VWAP, you also want to be looking at momentum to be confirming overbought, right? You want to see momentum building as it builds the right side of that base. So
absolutely. I think the VWAP's going to end up being closer to this like 36 level. I think this
probably,
seems like
by the time
key level
there.
of interest. So,
yeah. Right.
So yeah, maybe come back and revisit this one in Q2. Not quite ready yet though, but
Yeah, maybe it finally breaks out of that base. And what's its next earnings? What's it?
that is
I mean,
February,
it
late
would make
February.
sense, right? Just structurally,
Yeah, no, that would make sense.
right at the end of February there, yeah.
You could accumulate it here if you are trying to swing a big position, but that's not something I'm doing.
Behind the 35 March?
Ye- Yeah,
I'm just kidding. I haven't looked at it at all.
I don't hate it.
Um,
I don't hate it at all.
but hey, I think we got to leave it here for today. If you want us to look at any specific tickers next time, be sure to email us at questions@stockmarketmedia.com and we will get to them on Monday. But that's it for today. But before we go, you got any favorites from today?
Yeah, I let's go back to the beginning. We were talking about
We had a
um
couple that I remember you liked.
yeah,
WGS, that was the V bottom there.
yeah,
And then CXT, that's probably mine. CXT, the small cap industrial there. I know volume's pretty light on that one, but there's been as long as make it a giant position and you can sit in that thing for a while, I think it turned into a really nice trend.
definitely. Yeah. I like that one too. The Midwest Industrials. Those get me excited.
Is it Midwest? I don't know. I thought it was like what is it? CXT. Where are they headquartered?
Looks like they are headquartered in Massachusetts. So,
Oh, okay. Industrial
let's call it
company
Midwest.
provides. Yeah,
It,
I liked your story better. Provides trusted
yeah,
technology
right.
solutions. Detect. Interesting.
Yeah, maybe they have some corporate office there, but really the operations are happening in the Midwest.
Good stuff. Well, hey, thank you guys so much for watching, and join us again on Monday.
Yes. Later, everybody.
Later.